You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 23rd day of September 2016. Let's take a quick look at the numbers. We'll start here with the cash numbers. Happy Friday, everybody. Those of you that are returning and those of you that are here for the very first time, a special welcome to you. Real quick, we're going to run through the numbers, then Michael's going to pop in and give us a recap of what happened in the live trading room, because he's got to do plane, trains, and automobiles today. So real quick, here we go. In the U.S. markets, the Dow is down 65 points. The NASDAQ is down 17. S&P is down 7. No movers or shakers there. And the Russell 2000 down 5. So we're red wall to wall, but after the rally we've seen, not unexpected. In our commodity basket, crude oil is down $1.44. and that's over 3%. Gold is down $2.40, and considering the rally we've had there, that ain't nothing but a thing. In the Asian markets, the Nikkei down 53 points, Shanghai down 8.5, and the Hang Seng down 73. But again, nothing there greater than half of 1%. In fact, we haven't even reached half of 1% on any of those, but they are, just like the U.S., red. And the color of the day continues all the way through Europe. The DAX down 47, FTSE down 2. Not even quite 2, 1.97 points, which works out to be about 0.03%. That's how quiet it is out there. The CAC is down 21, which again is also less than half of 1%. So Europe is mildly red, Asia is mildly red, and the U.S. is mildly red. We're steeped in a quiet world of red, and even our commodities, both of them, oil and gold, the ones we regularly watch, everything's red. So, happy Red Friday to you. Without any further ado, we'll go straight over to Michael. He'll walk us through everything that happened in the live trading room today. And after that, I'll be back with our good word for the day. And I'll answer any questions that you have, and we'll take a look at last night's Concierge Trade Alerts, although you're going to see that there's not a lot to see because, well, I just told you how flat the markets are. This is incredibly unusual, but it is what it is. So, Michael, take it away.
All right, thank you. Thank you, sir. And here we go. All right, I'm going to hit the record button. All right, good afternoon, everyone. Today is Friday, the 23rd day of September, 2016. Today, in the live trading room, we made 17 ticks on soybeans, 12 ticks on crude oil, and 1 tick on gold. So we're up $342.50, and that was in 7 trades. So it took us 87 minutes and 4 trades to get to our goal for the day. At that point, we were up $110 a contract. And as I said, we took 7 trades in total today. So on the month, we're up $23.83.75. That's over 16 trading days, averaging $148.98 per day. You know, as Dwayne said, this kind of activity is really unusual. This past week, you know, leading up to this past week wasn't bad, but this past week was just 6 trades, 9 trades, 9 trades, 7 trades, 7 trades. I don't think we've had 5 days in a row with less than 10 trades ever. Well, since I started keeping track of it anyway. So hopefully the volatility will come back next week. But either way, we're up $342.50 today. If you were to apply an $8 commission to every trade we've taken, you would have a net profit of $879.75. And if you were to apply a $5 commission, you would have a net profit of $1,443.75. Let's see. On the year now, we're up $43,228. That's over 180 trading days, averaging $240 per day. $240 per day. Okay. If you have not taken a free trial with us, you just need to go here to the CFRN.net homepage. In the right-hand column where it says register for a free trial, put in your name, put in your email, click on register for a free trial. When you do that, you will see a confirmation link. You will get a confirmation link. You must click that confirmation link. Okay, it will be emailed to you, so make sure your email is valid, and we can email you that confirmation link. All right, today in gold, we had just 1 trade right there. 1 trade, 1 tick. During the break, it looks like, well, it's pulling back right now to give a possible short trade. Okay, This is going to be a quick recap because the ES was just sideways all morning. Just a mess all morning. Crude oil, well, crude had some movement during the break here. Had some nice movement. It all started at the end of the live trading room though. I took this trade. This was my last trade of the live trading room, I think. I got 12 ticks profit. This was my one trade on crude today, and I got 12 ticks profit. After that, there was a short trade right here on crude. Another one right there. And the cycle needed to reset. And well, and the cycle did reset, and now it's given another short trade right in here. And that was it on the crude. Soybeans, we had these two trades on the beans. The first one right here, we took 9 ticks profit. And the second one, we took 8 ticks. And I had told everyone that it's going to get down to 54. I had even put a little alert down there at 54. And it did get down there. It gave the trade just as we were getting out of the live trading room this morning. It triggered the short trade there on the soybeans. And the euro, we had a few trades here on the euro. They were all break even though. One there, and one over here. Okay. During the break, not much of anything. Not much of anything there during the break. On the gold, that's our trend line. Okay, on the gold, that's the trend line for the upcoming trade. Okay, and that's everything, guys. It's gonna be one of my fastest recaps ever. Okay, so to take our free trial, you go here to the home page at CFRN.net, and in the right-hand column where it says register for a free trial, you put in your name, you put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click the confirmation link. Okay, if you don't click that link, you don't get the free trial. Simple as that. The recap of the recap. Today we made 17 ticks in soybeans, 12 ticks in crude oil, 1 tick in gold. So we're up 342.50, and it took us 87 minutes and 4 trades to get to $110 a contract, and we took a total of 7 trades. All right, so that's it. On the month, we're up 2383.75 over 16 trading days, averaging 148. And on the year, we're up $43,228. That's over 180 trading days, averaging $240 per day. Okay. And that is it, guys. With that, I'll shut off the recording. And Dwayne, I don't know if you're there because I know that was quick, but we can head back out to fabulous Phoenix, Arizona. If you are. Phoenix must be getting a coffee. So how many of you guys were in the morning session today? Did any of you take that second, actually that third leg on the soybeans? See, this was the leg length I had drawn earlier. That was the leg length of the first one. That second one didn't go as far, but that third one was exactly right. Did any of you guys take that? Because it was clear, I thought. Let's see, our daily double today said selling the ES. Okay, that hasn't triggered yet. In the NQ, I don't have an NQ chart up, I don't think. Oh, I do have an NQ chart up. Okay. Well, that's it. I'm done. Dwayne, if you are ready, I will pass things along to you.
Yeah, go right ahead.
Okay. There we go. Back to you.
Alrighty. Have a safe trip.
All right. Well, thank you, and we'll talk to you. Well, anytime. You can text me when I'm flying.
All right, buddy.
Okay. All right. We'll see you. Have a great weekend if I don't talk to you.
You too.
Get some rest. All right.
Bye-bye. Okay. Send off an email here real quick. Bang. There it goes. So we hit our highest weekly trading zone for the week on the S&P. This is this week's weekly trading zones. We went over all that yesterday. And that 2015 high kept coming into play. If we go back a couple days, actually the beginning of the week was the 18th, which is right here, yellow arrow. And so we went from basically zone to zone to zone to zone to zone. Problem is, it's the same zone. If you go back and look at past charts, whether you Google them up or just go through the blog, meander page by page, zone, 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 it's usually not the same zone over and over and over. This time we go zone to zone to zone, and then we shoot yesterday finally up to the highest weekly trading zone. So my point being, I guess, is that the type of activity we typically would see on an ordinary week is not being compressed inside of one zone for the majority of the week, but having some movement from zone to zone, you know. Anyway, like I said earlier, it is what it is. And so the markets are waiting on something. When the North Korean dictator shot his missile or set off his bomb, it looked like for a moment that was the thing the markets had been waiting for, but it turned out it wasn't. We got some good movement for a couple days, but that's we don't want to see that kind of, you know, tragedy and horror. That's not what we want to move the markets. We want the markets to move because of the things that have moved the markets for a lifetime. Then it became, well, we're waiting on the Fed. Waiting on the Fed, waiting on the Fed. And we caught, you know, pretty good rally off the Fed. But now we're back to wait. Still that air of expectancy, waiting on something. Now, you just heard Michael go real quickly through what happened in the live trading room today. We were still able to get our points for the day. This is one of the reasons that we've always been such strong proponents of the fact that the true equation to solving the markets, or the answer to solving the market equation, I should say, is not more points, but more contracts. Because you don't always get more points, but you can always add more contracts. Where the mistake is so often made is that people, because they've sold a business or retired or have come into some money somehow, They get in, they get a little bit of education, and they realize, if I were trading the S&P, and if I only took 1 point out every day, and I was trading 10 contracts, it costs $500 per contract. That's $5,000. That's a $500 a day income. I've never made $500 a day. Now, of course, if you go for 2 points, that becomes $1,000 a day, right? But what happens when the market gets quiet? What happens when getting more, if your methodology depends upon taking, 4, 5, 6, 7, 10 points out of the market on a daily basis, there will be times, as we've seen here lately, when that becomes difficult. But there's never a time when it's not possible to take a couple points out of the market. It may take more than one trade to take your couple points, but that's okay. Our methodology is built around giving you 10 trades a day to make your daily goal, which is the 2 points in the S&P or the equivalent thereof. Doesn't matter how many contracts you're trading, as long as you've earned the right to trade that number of contracts. And how do you earn the right to trade a certain number of contracts? Well, you start in the simulator and prove that you are consistently profitable with whatever strategy you're using. It doesn't have to be our strategy. Now, our strategy, I think, is a good strategy for many reasons. One is because it's just so doggone simple. I mean, once you spend a couple of weeks watching Michael at work, asking questions, showing up at the workshop and asking questions, it always comes back to you asking questions. We display it every day, but then you have to ask questions until you reach the point where you understand what's going on. There's nothing psychic happening. We're not reading any tea leaves. There's no crystal balls. And there's none of that stuff. It's simply reading the chart. Okay? Now, this appears to be, to someone who hasn't studied this, it appears to be pretty random. But as you spend time studying the charts, reading a chart becomes like reading a newspaper. Now, this is a 30-minute candle. To better help you understand the chart that you're reading, we use, or you should use, multiple time frames in the live trading room, because things are moving so quickly. Michael's trading 5 different markets. And by the way, we're not trying to teach you to trade 5 markets at one time. He's got 5 charts up so that on any given day he can show you as many trading opportunities as exist. Whether it's the S&P or gold or crude, doesn't matter what market we're trading. We trade all markets the same way. We use the same indicators, the same strategy, the same time frame. And people say, how's that possible? Well, it's because all markets, all auction style markets, move in the same way. And people say, no, different markets have different personalities. I don't know you know, what seminar sold them that, but anyway, people are always buying a bill of goods somewhere, right? So here's my point. Could that hold water, that markets have different personalities? Sure. But when your goal is to make $100 a day per contract, how much do you really need to know about the personality of a market? You know, I'm just going to say not a whole lot. What you need to understand is, more than you need to understand the personality of any one market, you need to understand how markets themselves work. They build a leg, and then there's a retracement, and then they build another leg. And if they put in a higher high, and then on the next retracement they put in a higher low, that's the definition of an uptrend. So you would want to be going long or buying the market when it pulls back, right? Now, you can quote unquote park an order at the place you think it's going to pull back to and close your eyes, grit your teeth, and hope for the best. Or you can use our tools to see if in fact the market is going to attempt to put in another leg, and if it is going to do so, then you can participate in that. And while you won't reach your goal every day in one trade by any stretch of the imagination, there will be days that you do. Why? Because you stepped into the trade at just the right time. Okay? Next time you get stopped out on a trade, take a look at the trade right before it and the trade right after it, based on the exact same setup, whether it's our setup or somebody else's. Chances are, see, that's why it becomes a business of probabilities. We learn to think in probabilities. Not definitive, not being right, not being wrong, but understanding that the best trader on the best day will be profitable 7 out of 10 trades. I know I covered this a lot yesterday. I want to end the week on it, and then I'll spend a week, not even talking about it. But it's just the core thing. If you understand that and get it deep down in your spirit and believe it, not with just with your head, but with your heart, you can build a successful trading business. Okay? All right. As you can see, we've had practically nothing happen here in the S&P today. We've put in a low of 2161. We had a Concierge Trade Alert last night that said to sell 2163. So from 63 down to, do we even hit 61 or 61 half? Now, that's difficult, okay, and unusual. I mean, look at yesterday. Buy 2158 rallied right up to the weekly trading zone at 14. A lot of traders will tell you they don't trade on Friday. I said this last Friday because last Friday was a lot like this. Oh, David, you watched that cartoon? Good. At emini.cfrn.net. I'm way behind on uploading the radio shows. Gosh, probably a week behind, even maybe more than a week. But I did upload a cartoon that has to do with how the Fed came into existence. It's an animated cartoon. It's about 30 minutes long, but it tells the story quite well. I'm glad you enjoyed it, David. So, just a quiet day, you know, from the high of the session. The session started last night at 6 o'clock, which would be 1800 hours. See, the market closes here at the candle started at 1630, so it closed at 1700, which is 5 p.m. Then there's an hour breather, and then the market opens right back up at 6 p.m. Eastern, 1800 hours. Now, as soon as the market reopens, day margins are in effect once again. A lot of people don't know that. If you've been around here any length of time, you do know that. The margin to trade one S&P 500 contract, which has a value, you're controlling over $100,000 of equity in the S&P 500 best of breed for $500. You say, well, I don't want to lose $500 on a trade. Well, that's why we use an 8-tick hard stop in the live trading room. What you just saw Michael walk you through. We have a couple different styles of trading. We have what we do in the live trading room every day. That's really designed, that's part of our 90-day mentoring program. That's designed to teach you how to trade, teach you how to read a chart and be consistently profitable, okay? And then upon that foundation, you can build the business of your dreams. When we get into the Concierge Trade Alerts, like this move here, 14 points, that's a whole nother ball of wax. Now, was there a lot of risk involved in that particular trade? Not a lot, but certainly more than someone who's brand new probably wants to put behind a trade, okay? But I'm not going to go deep into that because we're not going to go long on the show today. I don't know. I meant to send an okay. Sorry to get distracted there. I'm trying to send an email to Chris to see if he wants to pop in. He is our ag guy. He'll probably answer me back pretty quick. Let's do this. Let's jump over to the good word for the day. Today's scripture's from Song of Solomon. You don't hear that you don't hear that preached a lot. 8:7 makes most people blush. Many waters cannot quench love, nor can rivers drown it. Song of Solomon 8:7. Stories told of a wedding where the minister said to the groom, "Do you take this woman for better or for worse, for richer or for poorer, in sickness and in health?" And the groom said, "Yes, no, yes, no, no, yes." We all want the better, the richer, and the healthier parts of marriage. But that's not the way relationships work. In some modern marriage ceremonies, the bride and groom pledge to stay together as long as love shall last. Well, let's hope they both know a good divorce attorney, because they're probably going to need one. The truth is that relationships which are based on feelings don't last. The only real stability in marriage is produced by a firm commitment that holds two people steady when emotions are fluctuating wildly. Can you imagine a parent saying to a child, "I'll care for you as long as I shall love you"? Of course not. And neither does a wishy-washy expression of love hold much promise for the future of a marriage. Think about it this way. Emotion is like the carriage of a train, but commitment is the engine that pulls the relationship through all the ups and downs of everyday living. Solomon put it this way: many waters cannot quench love, nor can rivers drown it. If a man tried to buy love with all his wealth, his offer would be utterly scorned. You can buy companionship, you can buy friendship, but you can't buy love. Solomon 8:7. One more thought on this topic. Now, I know that probably the majority of this audience is older and is married or has been married, and some of us may be on a second marriage. I'm blessed. I'm 34 years married to one woman, the same woman, all 34 years. I know that others have struggled and have dealt with divorce. Some have lost a spouse in other ways and become a widow or widower. But there may be a new relationship up ahead. Or perhaps you're a younger member of the audience, and perhaps you've yet to find the one. I've counseled so many young couples before marriage, after the marriage, during the breakup, and it's not about feelings. It's not about emotions. It's about finding someone with whom you have a common bond, and then making a commitment that says, from this day forward, it's you and I against the world. And it doesn't mean you and I are looking for a fight with the world, but you and I. It's you and I. It's you and I. We'll have children. We'll love them. We'll diaper them. We'll feed them. We'll clean up their mess. We'll send them off to school. We'll sit up late waiting for them to come home. We'll go through all the things a parent goes through. And then someday, God willing, we'll see them off on their own to raise their own family. And we'll be left with each other. So, husband, wife, never let anyone come between you and your spouse. Not people, not family, not money, not jobs, not sports, not the bridge club, not anything, not no way, not no how. Because the greatest love you'll ever know is the love that is born out of that commitment that says, I will love you for better, for worse, for richer, for poor, in sickness, and in health. And you actually mean it. If anyone thinks that my 34 years were a bed of roses, where everything just fell into place, you couldn't be more wrong. There was some shaky times. A lot of times there were holes in the ship, and we had to bail hard and fast to plug that hole. But our ship's still afloat. At least today it is. The theme of the Bible is resurrection, is it not? That's what separates us as believers in Christ, from every other religion, is that the one we serve is not buried somewhere in a plot. So I want you to think about the theme of resurrection in light of your marriage. That means even though your love may feel dead, God can cause it to live again if you're both willing to let Him work in your heart. Are you? Will you? I pray that you will. That's our good word for the day. Wouldn't be a day at CFRN if we didn't take a look at least one headline or two. Another ad from Hillary's campaign uses controversial comments from Donald Trump to send the message that he's not a good role model for Americans. The ad shows clips of young women looking at themselves in mirrors and in phone cameras, interspersed with clips of Trump making degrading comments about women. The Republican presidential nominee is shown in the ad saying things like, she's a slob, she ate like a pig, and a person who is flat-chested is very hard to be a 10. The ad concludes with an interviewer asking Trump, do you treat women with respect? To which he responds, I can't say that either. He then closes out with text asking, is this the president we want for our daughters? The ad right now is airing in Ohio, New Hampshire, Iowa, Florida, Nevada, North Carolina, Pennsylvania, national cable. Donald Trump has spent his campaign and career demeaning and insulting women, which is just one of the reasons a majority of American women do not think Trump respects women, the campaign said in the release. In stark contrast, Hillary Clinton has spent her career fighting for and uplifting women and girls, and that's exactly what she'll continue to do as president. The Clinton campaign has run similar ads in the past showing children and military veterans listening to Trump's incendiary comments. Why you got to ask yourself, I mean, if you want to be a well-informed voter, if Hillary has always stood up for women and girls, what about the 24 women who were brutally raped by Bill Clinton who have come forward and told their story? You can buy the book, read it for yourself. Maybe you don't believe the women. Maybe they all made it up. It's called The Clintons' War on Women. And you say, well, but Bill's not running for office. Well, according to the Secret Service and all those who were around, and according to the women who were brutally raped by Bill Clinton, and I'm not talking about the affairs that he had, but in each of these 24 cases, Hillary was the point woman in making sure this thing didn't get out of hand, that Bill didn't get in trouble, that the truth didn't come out. But the truth has come out, and yet they still have this magical ability to bury it, to the point where some people say, well, it can't be true. Well, then I challenge you to do the research. I know there are many in this audience who have a hard time seeing either Hillary Clinton or Donald Trump as the next president of the United States. It's no secret, neither one of them was my first choice. And so we're left with the, sadly, lesser of two evils. And you're going to be asked to make a decision in November. I hope you've thought long and hard about what that decision is going to be and what the ramifications are going to be. Now, on a brighter note, for some, a professor who has accurately predicted the outcome of every presidential election since 1984 told the Washington Post that 2016 was the hardest election to predict yet. Okay, now, this guy has accurately predicted the outcome of every presidential election since 1984. I'm curious if he attempted to predict any before 84. In other words, has he ever been wrong? I don't know. Maybe we'll find out here. But he has come to a decision on who is most likely to win in 2016. And that person is Republican nominee Donald Trump. Professor Alan Lichtman, who wrote the book Predicting the Next President, The Keys to the White House, 2016, uses a series of true and false statements to determine his predictions. He considers things like incumbency, the economy, social unrest, scandals, and charisma to figure out which way the election is likely to go. Lichtman explained to the Post how the system works. The keys are 13 true-false questions where an answer of true always favors the re-election of the party holding the White House, in this case the Democrats. And the keys are phrased to reflect the basic theory that elections are primarily judgments on the performance of the party holding the White House. And if 6 or more of the 13 keys are false, then they go against the party in power. They lose. If fewer than 6 are false, the party in power gets 4 more years. Still, Trump is such an unusual candidate, he might break the American political mold that's held for decades. We've never before seen a candidate who spent his life enriching himself at the expense of others, Lichtman said. He's the first candidate in our history to be a serial fabricator, making up things as he goes along. He noted that Trump has also taken other questionable steps, like embracing Russian President Vladimir Putin, inviting Russian hackers to meddle in the U.S. election, and threatening to blow Iranian ships out of the water if they came too close to U.S. vessels. Now, it's amazing that even conservative, I'm just going to read this. I'm so surprised that of all people, Business Insider would publish this. Given all these expectations that Donald Trump represents, he may well shatter patterns of history that have held for more than 150 years, lose this election, even if the historical circumstances favor it. It looks like a narrow victory for Trump, Lichtman said. And the key is Libertarian candidate Gary Johnson, who is now polling in double digits. But that might shift by Election Day. As people realize, the choice is not Gary Johnson. The only choice is Trump or Clinton. Those Gary Johnson supporters will ultimately move away from Johnson and towards Clinton, particularly the millennials, according to Lichtman. Trump has been surging lately in the polls, but last month his Democratic challenger, Hillary Clinton, was far ahead. Other less fickle measures of predicting the election put Clinton out in front. An electoral college map released last month from the University of Virginia Center for Politics projected Clinton winning the election by a landslide. Well, if we don't get out and vote, if we don't get out and talk to our neighbors, if we don't share the truth, we don't have to sling mud at Hillary Clinton. We just simply need to reveal the truth. The truth that's been revealed on this radio show day after day after day ad nauseum. How many days did we go through the body count? Yeah, of course, I'm sure some of that was coincidence. But at what point do you say, wait a minute, this can't all be coincidence? Can it? I don't know. Can it? You tell me. But whoever does take the Oval Office for the next 4 years, it's going to And Hillary gives Mark Cuban a front row seat for Monday's Titanic debate. Two of my favorite people in the whole world, Mark Cuban and Hillary Clinton. Mark Cuban is going to have one heck of a view during Monday's initial presidential debate between Donald Trump and Hillary Clinton. The guy who robbed and stole his way to being one of the richest men in America. The Clinton campaign provided a front row seat to the billionaire businessman at the Hofstra University debate on Long Island. He has the best seat we have access to, an aide told CNN. The Dallas Mavericks owner first announced on Twitter Thursday night that he had got a front row seat to watch Clinton overwhelm Trump at the debate. Cuban referring to the looming political slugfest as the humbling at Hofstra. The star of ABC's Shark Tank has been very critical of Trump in both interviews and on social media, railing on the Republican nominee's lack of preparation and refusal to release his taxes. He called Trump the most dangerous potential president he can think of in a recent interview. Cuban endorsed Clinton at a July rally in Pittsburgh, his hometown. Earlier in the cycle, Cuban was more enthralled with the idea of a Trump presidency and had expressed interest in serving as either Trump or Clinton's vice president before eventually souring on the Republican nominee's candidacy. Maybe that's because Trump didn't really want to have anything to do with him. I mean, you guys have been covering me for a long time. Cuban told Business Insider in a recent interview, I mean, I've historically been apolitical. You've never heard me talk about politics all that much, and it's just, I can't think of anybody more dangerous as president than Donald Trump. I can't think of anything worse than with him not having a clue, he continued. I mean, could you imagine somebody who doesn't read and doesn't learn? So where do these kind of comments come from? And why does the media print them? Trying to deal with the day-to-day changes and challenges of the job. I can't wait for the first debate. It's going to tell us a lot about who I think will ultimately end up in the White House. Now, why would I read 3 articles that are basically anti-Trump? Because I want to make a point of how badly this thing can go, because the media has been bought, convinced. We got 3 days, 7 hours, and 58 minutes to the election. I mean, to the debate, not the election. To the first debate leading up to the election. So I read those 4 articles because I wanted you to hear how jaded and how one-sided the media is. Even what's supposed to be quote-unquote conservative media. And that should make you mad. It should get you upset. It should make you say, wait a minute, this is wrong. I don't know if it will. I really don't. I hope it does. And I'm glad Mark got a front row seat. I truly am. All right, real quick, let's take a peek at the different markets. S&P 500 yesterday, it had a beautiful 14-point rally. Today, we've just been dribbling down the chart here. We were looking to sell 2163 on the alerts last night, and the markets had a hard time even putting together 2 points off of that. Now, if you were trading in a, now, if you see this swing high up at 67 and this swing low down at 61, that's 6 points right there in that hour. If you were running the charts that we run in the live trading room, you would have, I won't say easily because there is no easy in trading, but you would have simply found an opportunity to take advantage of that move. This move, this move, this move, this move, and this move. Okay? And the Dow, let's see, last night we were looking to sell 265. That actually happened. Huh. Hate to sound so surprised, but it did. $265. Now what was the swing low here? 263. How torturous is that? Well, if you know where to put your stop, it's not a problem because you didn't get stopped out. The reward side is not as great as we would like to see it. So what was this? Sell 18,265. See, did Chris ever email me back? Oh, there's Chris' email. Okay. Chris's response was, it's pretty slow right now. So, when? I just told him to come on now. 65, we got a low here of, well, it's 23. If it was 25, that would be 40 points, so 42. $42 points available per contract. Okay. There to there. Okay. So far, this thing may drop more before the day's out. Gold barely budged. Let's see what we're looking for on gold. GGCZ. Gold, we're looking to be buyers at 43 and sellers at 39. 43, we got a swing high of 44.50. It's 150 bucks. And that went out at 2100, which is here. So we had a chance to sell 39 and we got down to 37.40. So that was 160 bucks per contract. Better than I thought. Look at this. Incredible. Now we've had a couple of pretty good days in bonds. We had a $1,000 day this week. Oh, one tick shy of $1,000 per contract. What were we looking for last night? On bonds, we were looking to be buyers at 68.12, which didn't happen. And we were looking to be sellers at 66.31. And that sure didn't happen. So we got no trigger at all on the bonds. Crude oil. Yowza. I guess we got something there. Let's take a look. 2,100 hours. This one's actually got enough movement that we want to make sure we get an accurate read here. 2,100 hours. Okay. Here's what we advised. No, I don't want to translate. Okay. Well, there were a couple options. Buying 46.15, selling 45.85. Gold took a wild ride. So here's buying 46.15 right here. And of course, important prices in important areas are almost always tested. $46.15. Got up to 55. So that's $300 per contract. And on the sell side, man, that thing is still dropping. Look at this. Wow. We were looking to sell 45.85. Which happened. Look at the swing low of that candle. 45.84. Now, so if you took a stop on that, if you were selling on a stop limit, you didn't. But if you weren't, you did. And so from 45.85 to 44.85. That's $1,000 per contract right there. $1,000 per contract available. And the swing low so far has took us all the way down to 44.28. 45.85. Minus 44.28. It's 150. Well, $1,570 per contract available. Now, those of you that were in the partners workshop last night, when we were talking about the indicator set and how on these types of moves it will keep you in the trade. That's one of the toughest things that traders face. One of the toughest things that traders face is once you learn how to get into a profitable trade is staying in it. Now, we got a rule of thumb that says anytime you make $1,000 on one contract, on one instrument per contract, I mean, so that number could be 3,000, 5,000, 10,000, 20,000, because there's plenty of volume. The volume's not an issue. So with 10 contracts, this could be a $15,000 move for you. But price, in order for us to get an exit signal, the CFMA1 has to cross, the step line has to cross over the MA1. Now, this has moved so quickly, okay, that I would be trailing, if I were going to stay in it, okay, I'd be trailing right behind that candle at this point, because it's going to take time for these indicators to even catch up with this. But what it would look like is the step line would cross over, the MA1 comes down, the step line crosses over, and then you get a green candle that closes above the step line after the step line has crossed over the MA1. Okay, now all of that coming together prevents you from exiting the trade prematurely. But when you have this much in a trade, we all know the rubber band only stretches so far. Sometimes it stretches further than others, but by and large. Alex, did you miss a recap? A recap of, what's that? Are you asking about the live trading room recap? Yeah, that was done at the beginning of the show. When I get the video from today's show uploaded, you'll be able to watch it then if you want to. You're welcome. All right, so let's get on through here. Wow, soybeans. So 2,100 last night. It's right there. And we're looking to sell 968. The swing low here was 66.25. Of course, we didn't pull back enough to stop ourselves out, so we don't have to concern ourselves with that. What we want to do is look at the swing low, which was 52. So from 68 to 52. It's going to be 16 points. At $50 per point. So that's $800 per contract available. Okay. And now one little move right there. And if you didn't catch it when it first triggered off the London Open, you had a chance to catch it again about 7:30 this morning. Farmers get up early. NQ, just sideways. NQ sell 48.81, which is right here. Sell 48.81. And we got a swing low of 48.63.75. So we'll round 63.75 up to 64. 81 minus 64. So that's 17 points at $20 per point. So that's $340 per contract. You know, that's not bad. It just looks bad. I can scale it and make it look better. There, see? Not photoshopping it. I'm just scaling it. Now it actually looks like a $340 drop. Okay, what do we got left? Russell? Okay. Well, I don't know if all the scaling in the world is going to help the Russell, but we'll see. This is where we were last night. Now, as you recall, yesterday on the show I said the Russell has managed to trade above the highest weekly trading zone. But by close of business tomorrow, Friday, it should be back below 1258. And we got as high as 1261. But as you can see, we're now comfortably back below 58. Last night on the Russell, we were looking to sell 58. And we got down to 52. From 58. That little runner right there, put it upon your stop loss. You only needed, you know, a 4-point stop would have kept you in the trade. But what happened at that time? That was at 9:30 this morning. That thing tried to rally, and look how it got slapped down. But it sure took out any stops that were right across here. So from 58 down to 52, that's $600 per contract available. And yesterday, the Russell offered up 1,500. Yesterday, we had said to consider buying 1244 on Wednesday night for the Thursday session, and that was the $1,000 per contract mark, but the whole thing ended up running $1,500. And in this little move today was good for 600. So, I mean, all in all, not so bad. Okay. Maybe Chris got tied up. Maybe Chris didn't see my email. Maybe Chris is on the phone. We'll catch Chris next week. I told you guys I was going to wrap it early today, and so that I'm going to do. So all in all, it wasn't quite so bad. This thing will. Oh, look, we finally broke loose here. Just a little bit. Got down to a low of. Oh, there he is.
Hey, how are you,
buddy?
sir?
Good. I was just
Hope
getting.
you're short beans today.
Boy, I'm telling you. Let's see. We were just looking at. Last night we sent out a. Well, we have a list that goes out every night to our subscribers, and we told them to short beans at 968. So it was a nice 16-point move at $50 a point.
Better than getting sharp stick in the eye. Yeah, good deal.
Yeah,
and
everything.
Maybe.
Go ahead.
We may have, if we take out that low there, that 937 low, that opens up the door to. We could go all the way back to where we were back in March, around 870. So there's a lot of downside risk. The yields are very large that are coming in, just across the wire. A lot of farmers, their APH, which is their average production history, was 45, 50 bushel an acre. They're getting 60, 65, 70 bushels an acre of soybeans. So I don't know what we're going to do with all these beans. And the market's starting to realize that. Now the Chinese have bought every dip. So they may step in here and open their checkbook up again, but certainly giving you lots of opportunities to catch moves here in November soybeans.
When do we switch out of November beans? In November?
We'll be there it will be there, for another 6 weeks, and then we'll switch to March. It'll go Jan and March, but usually we'll go from it'll be March probably. That's where the open interest will move into March, and then it goes March, May, and then we're right back in with next year's crop. So
the last time we talked, by the way, guys, this is Chris Robinson of the Robinson Review. Let me put his website up on the screen so that you guys can
say hello to everybody.
See who we're talking to.
Yeah.
There we go. When we talked last week, you cautioned us about the report that was coming out this past Monday.
We've got one. Yeah, we had one last Tuesday, I think. Last Tuesday, which we rallied off of. Now, a week from today.
Yeah.
A week from this Friday. So next Friday, there's another stocks. It's an ending stocks report. That again, does it always give you opportunity? No, but generally it's a focal point, and those types of focal point events, you know, you can give you a good, kind of sets the table for a move. There's no guarantees, but it sets the table for a move.
Okay, so the potential to put some fuel on the fire. You know,
Yeah, absolutely.
the markets overall were so quiet all week. We thought, well, you know, okay, waiting on the Fed, and then the Fed comes, and yeah, we get a pop off of it, but then it fizzles out.
Tell you what I look at these beans. If you go back to the March 2nd low and start there, the trend line. If you draw a trend line from the March 2nd low, the next low I'd be looking at is the September 1st low, and then on both the 14th and the 15th of this month, it hits. So it hits 3 times. The intersection point today is around 946. I think Monday's intersection point is going to be probably a little bit higher. The 26th is going to be around that 946 area. So
I just brought up a daily. I just brought up a daily chart on beans. Where did you say to start?
So start on March 2nd on that low, which was 868 or 869, 868. And then it hits again on September 2nd, on 9/2. The low there was 937. Then it hits 2 more times on both the 14th and the 15th. The 14th, the low was 940 and a half. The 15th, the low was 941 and a quarter. And you extend that out, and you know we haven't tested it yet. There's still 45 minutes left to go. I've seen stranger things, but that trend line intersection today is 946. Now that's 11 cents lower than where we're at now, but you know the beans can do that in a heartbeat if they want to. But moving forward, that's something I'd be watching as we head into that the next week of trade when we get ready for Friday's stocks report. So again, do they always work? No, but they work often enough that they also can give you a focal point, a focus. It's kind of like when you're a kid and you took out the magnifying glass and you know would shine it on certain things. You can shine it just right, and that's what those trend lines, in my opinion, anyhow, trend lines like that, and a good one like this, one that's goes all the way back to March. So you're the 6-month-old trend lines. The older the trend line, and the more times it's tested, makes it more significant. So you've got a trend line there that's 6 months old. It's been tested 3 times.
So it coming off your day back on March 2nd, we had a touch on September 1, and then a touch on September 14th. Am I drawing the right trend line?
The first, then the 14th, then the 15th.
Yeah, we hit it on the 15th as well, 14th and the 15th.
Yeah, and so that's something I'd be watching. And the nice thing about it is too, it's a simple thing. It's not complicated. It's not, you know, you don't need to take your shoes and socks off to figure out where it is. If you've got a ruler, and a pen, you can do it. It's very simple. But people don't like them because they don't always work. I mean, we live in a world where people want to press a button and you know have it all work all the time. You know,
Sure.
But it's just something to look at. And if you're trading or speculating, I think it's something that you've got to be aware of.
Now, what sort of rule, do you have any kind of rules that you trade with or by when it comes to trend lines? Like, do you expect this trend line to hold this time?
Yeah, I mean, me historically, I'd be a buyer there. I'd be a buyer at that level.
Okay.
Because lots of times what will happen is, well, suppose we hit that today. Let's just do a what if.
Mm-hmm.
You know, that 46 level, I might be a buyer all the way down to about 41. You know, that nickel, because what happens sometimes, it hits that line, I call them the weak short. So if we took out that support, then the weak short step in. Those people that think it's going to go lower or you know, are coming in at the end of the move. Lots of times you'll see it snap back. So it's a good kind of almost a contrary indicator. And that's something that I'd watch. So I'd be a buyer at that level. Trying to pick it exactly, lots of times you can miss it. Sometimes it doesn't come exactly right down to the trend line. Sometimes it goes through the trend lines by 2 or 3 cents. But It gives you a good intraday shot for a scalp, and I'll do it up to 2 or 3 times.
Mm-hmm.
And then the thing is, if you're trying to buy this trend line and it starts moving against you, you can't be stupid about it. You've got to either get flat or get short if it starts taking it out, because if it does accelerate lower, you've got no support on this chart going all the way back to,
oh man,
really the first support will be $9. I mean, so there's 50 cents worth of an air pocket there if this fails.
$9. $9. Whoa! At the beginning of that.
Yeah, and it's one of those
Well,
things.
yeah, okay. I see the $9. I see what you're talking about
around
now
March
with $9.
Yeah. So that's the thing I'd be watching. Just again, it's not overwhelming. It doesn't, but it's something that I would take a look at. And if you can do a trend line above too, if you want to really. I mean, you can go to the high of the move, and if you go to June 13th, the high is at 1186.25. It hits 2 more times, both on June 30th at 1159 and change, and then on July 1st at 1157. I've seen that before. It goes down and hits this trend line, and then everybody gets short because they think it's going to $9, and lo and behold, it turns around and it runs up the other way. So that little wedge formation can be a profitable thing if you can stay disciplined. So actually, if you draw those two trend lines together, you have a nice like wedge formation.
I just
and if you stretch it out to its end, I mean, it comes to an apex really right around November, which ironically is going to be right around when we're going to be figuring out what the final yields are.
Mm-hmm.
So that's what I'd be watching there. The other thing, I don't know if you guys ever pay attention to cotton. Cotton had a really beautiful technical trade. Now, cotton can be very dangerous. They call it the widowmaker for a reason, because it's kind of a thinly traded market. But December cotton had some really good action. The last couple of days here. If you've been watching it at all.
No, but let me bring up a chart here real quick. So rare that we look at cotton. I've got to remember the symbol. Give me a second.
At CT.
Let me try. Yeah, I can go with the continuous, I suppose, at ZC. Now that's corn. What did you say you thought it would be?
At ZT?
Oh, ZT. ZT. Nope, at ZT gives me 2-year treasury notes. Did I do that right? Let's try it again. At ZT. Yeah, that's treasury notes.
Well,
I'm trying to figure out what would give me cut.
Pretty sensitive to the Chinese. The Chinese are the biggest producers and biggest consumer, and it's one way to sort of get on that market. But we had a very big, we had a good rally, and then we had a correction right down to the old support around 66 level. Then we rallied back, and you like to talk about Fibonacci's. It was almost a perfect Fibonacci, 50% retracement, and we've moved lower since then. So the only problem with that market is, and it can be straight up with you, it can be very thin, and you've got to be careful. CTZ, that's what it is on mine. I'll tell you what, what I'll do is I'll shoot you a chart. You can see what I'm talking about. But
oh, wait a minute, I found it here. Yeah, never. I got it. Hang on. At CTZ. No, it looks like I've got to give it a month. I've got it. So what's the current month?
Use December. December, I would use December, which is Z.
So CTZ.
Um,
Oh, actually, mine goes up. It's CT-MZ6. Boy, let's make that complicated. Okay. All right.
yeah, I'm sending you a chart right now. You can see what I'm talking about.
I'm showing a current price of 69 cents.
But if you go back to, and I just sent you a chart.
Yep, I got it.
We had if you look at a longer term chart, for about 2 years, going back all the way to really, quite a long time ago, we couldn't get above 66 cents. It was kind of this wall of resistance. And then lo and behold, here in about July 8th, we popped above 66 and took off. Went from 66 all the way, ended up to 77. So a good rally. And then we peaked out there on about August 5th, and we came down and made what looks like a triple bottom now, but at the time it looked like it was going to even extend lower, but came back down and found support at what had been old resistance there at that 66 level. And then lo and behold, the last couple days, we came up and flirted with that halfway back point, which is 71, 72. Then today they slammed it. So a nice technical trade. The only caveat is it can be thin. There's only about 20,000 contracts traded a day. But again, there's a good opportunity for anybody out there that is looking for technical type trade.
Well, with cotton, you got that same wedge type trade that you pointed out on the beans, coming off of that high from August 5th, and then the high of September 22nd. You draw a trend line right down across there, and then go back to February, was that February 29th? And then you hit the trend line again on August 31st, September 1st, and we flirted with it a couple times, but we haven't touched it again. So, So what are you looking for here in cotton? Are you looking for, I mean, is cotton something that can be traded intraday? Are there intraday trades to be had?
I don't know. I think it's more of like the type of setup that you just saw there, where it gets to resistance, and you kind of have to pick your level, pick your spot. But intraday, obviously, I would say, I mean, I sent out emails to all my guys yesterday, only cotton producers and guys that trade, that it was a good opportunity to set a hedge or to get short. And of course, hindsight's always 20/20, but we had a good, almost a $3 move down. That's $1,500 on a one lot. I'll take that. And some producers have got quite a few, quite a lot of exposure. So it's a good mesh for me, because I have producers that actually need to use these markets to hedge their price risk. And it also gives opportunity for guys that are specs. And I like those types of trades where you bet. I always want to get a 3-to-1 or better risk reward. So if I'm risking $500, I want to make $1,500 or more. When you're wrong and you lose the penny, you want to have your losses be 3 times as big as your. Excuse me. You want to have your profits to be 3 times as big as your losses, because then you can be, wrong a couple times, and then when you're right, and then when so I always look for 3-to-1 or 4-to-1 risk rewards. So I want to bet 10 cents to try and make 40 or 50. Really, that's the type of action. And soybeans have been great for that. You can have a 3-cent risk and make 9, 10, 12 cents. I mean, you'll do that all day long. If you pick your spot, risk 3 or 4 cents, and then when you're right, you try and make 12 to 16, and the beans will give you those chances. So at the end of the day, cotton's very sensitive to really what's going on in China. Like I said, they're the biggest producer and the biggest consumer. And but make no mistake about it, if you aren't disciplined, if you don't have good discipline on taking your losses, it can hurt you. And you don't believe me, just go back and look at where cotton was in February. February, we're down at 54. We went from 54 all the way to 78. So if you decided to sell it at 55, you know, you could have put yourself into a world of pain if you hadn't been disciplined on getting out. So those are the things I look for: good risk rewards. And after doing this for 26, 27 years, and you want to keep, if you can do that, if you can make 3 times as much as when you're wrong over time, if you can manage the value of whatever money you have. I don't care if you've got $1,000 or $10 million.
Right.
It all comes down to how much are you risking per bet. And the first person that I got involved in this business, I read that book, Market Wizards. I went out and I met at Dakota, and he said, one thing I can tell you is trade small, because you know, he had a thing where everything was a 1% bet. He said you can be wrong, you know, 50 times, because you know you're better odds if you flip a coin. He said, but it's not about what you do when you're on the right side of the market. It's how fast you get out of losers.
Mm-hmm.
So anybody listening out there, and I think that applies to a lot of things in life. The sooner you can admit you've made a mistake and your analysis is wrong, and you get over it. A lot of people get caught up because they've done their homework. They know, they think the market should have done X, Y, Z, and it doesn't. Mm-hmm. And then they get lulled into either not getting out or hoping. Start hoping and praying, and
right.
That's not a good discipline system, you know.
No, it's not. And it's, you know, man's drive to be right. And, you know, I was just talking earlier about how difficult it is for someone to stay in a trade that has gone right. I mean, they'll stay in a wrong trade forever because, you know, like last night, we, in that same email, we told them to sell crude at 45.85, and the last time I measured it, $1,500 per contract. And we have an indicator set that will tell you when it's time to exit the trade. And whereas many people would, you know, have great difficulty staying in the trade at this point, all the indicators are still pointed straight down. I mean, this thing moved, you know, the bulk of the move happened in 30 minutes, from 11 to 11:30 today. I don't know if some news came out or what happened, but the bottom just fell out.
Yeah, they're gonna have an OPEC meeting or something. I think it really is just, it's Friday, profit taking. You had a pretty good bid in all the commodities right after the Fed on Wednesday.
Yeah.
You saw it, and I just think it was a kind of people stepped in and bought everything. They bought, and you know, it's interesting to watch gold and silver. Gold went right up that little trend line there, and then backed off. And I just think you're seeing a little pause in the cause there. But you did see that after Wednesday's report. You look at a daily chart of gold. I mean, they bought gold that day. Gold dipped down to 13.10, and then finished the day at 13.41. That's $30. Yesterday they extended it up to 47.
Yep.
And they're taking a little bit off, you know. But if we can get gold above 13.80, then there'll be another leg, because there's a lot of interest in the world right now with the stock market at record highs and continuing to grind higher. People are starting to get more involved into commodities because they're concerned that when and if the break comes, they want to own commodities. Now, people have been waiting for the big break in the stock market for 7 years. So
I know.
It may be another 7 years. And the type of action that you saw yesterday in the NASDAQ gapped open and went higher. That to me suggests that somebody wanted in that report, that Fed day, that they were short the NASDAQ, and they pulled the trigger on their shorts yesterday. and got out. But you've seen that time and time again. And, you know, sooner or later they're going to catch it. We're overdue for a correction. But
well, our recommendation last night on the NASDAQ was to sell 48.81, and we're trading 48.63 right now.
Yep, there's your phone.
Yeah, it always rings. Never stops.
So those are the things I look at. I mean, I think that, especially if you don't have a whole lot of time to sit in front of the screen all day, and it sounds to me like you help your people with your signals and stuff, you know, set your trade, and then lots of times you're better off just turning it off. Don't watch it all day long. You know, put your stop in, and then you said, you know, how do you let a winner run? Put your stop in and let it run. Turn the screen off. Go do something else. Go for a walk. Take the dog out. Don't look at the screen all day because you'll be tempted to take profits too soon.
Mm-hmm.
So
yeah.
On that note, I'm gonna hop.
All right, brother. Have a great weekend. All right, we'll talk to you again next Friday. Guys, go over to the RobinsonReview.com, take a free trial in the newsletter, and we'll see you next Friday. All right.
Thanks. Take care.
Okay. Bye-bye now.
See you. Bye.
All right, there's that drop, guys, in the NASDAQ. Look at that thing go. What's the S&P doing? Is it dropping with it? Yep. Down dropping with it? Yep. Bond's still flat as you can get. Beautiful short and sweet beats last night. God, I hope you guys got that. I hope you got this short in the NQ today. Now we're down to 48.58. Even at 60, that's 21. Yeah, what a nice move. All right, guys, this is where I call it quits for the day. Now, if the S&P continues to decline, watch the weekly trading zone right below you, 2152/2153. Okay, that should be good support, and it really looks like that's where price wants to head. Okay, let's keep an eye on that. And it is the weekend. Jerry, since I re-signed up for the room, I've not received a new member login unless I missed it. Did you check and see if your old one just got reactivated, Jerry? Yeah, sure, Alan. Below 2152 is 4142. And then below that is the 2015 high. The year 2015, the high, which is 2134. And then below that is 3031. Okay. David says he took the concierge trade at 2163, now has 5 points on the ES. Good for you. Good job. You know, Jerry, let me check on that for you. Now, are you getting your Monday morning email? With all the trading room info and the zones. Okay, so the only issue you're having is with access to the live trading room. Correct? Let me check one thing real quick here for you. I'll have to fix it later, but I might be able to. Just hang on 1 second and let me see. Let's see what I see. Maybe we got a quick fix on here. God, you've been around forever. I'm trying to scroll back to where your original. Wow. You've been around since 2011. I think, in fact, I think you go back so far that what I'm going to do is I can't, and I won't be able to do it right this second, but I will go in and I will reset your user ID and password for you. And I will email it to you tonight. Okay? Yeah. Wow. 2011. Okay, I'll get that taken care of. And if you don't get an email from me tonight, because you know how life happens, if you don't get an email tonight saying, hey Jerry, here's your login and your password for the website, shoot me an email in the morning, okay, and say, hey Dwayne, you were going to fix my user ID and password, and then I will just, I won't have anything else going on, and I'm going to, my intent is to get it done tonight. Okay. All right, good enough. Let's see. Mario, you have a similar problem. Let me check you out. Now, Mario, do you need yours reset, or have you forgotten it, or tell me what's going on? Oh, you forgot the password? Okay, then there's a chance I could fix yours the way I had hoped to fix Jerry's, by just going and finding the original email. No, I've got it. I'm able to, in the chat room, I right quick, sorry. I right click You know what? I'm just going to write your name down and go in and figure yours out as well, because I thought it would just pop up, but it didn't. You're still using the email address that starts with an X, is that correct? Okay, all right. I'll get yours taken care of too. And I'll get you guys both. Now, Mario, are you getting your emails okay? Monday morning, you get your email with the trading zones. Yeah, when I send it to you, Mario, I'll send you your user ID and your password. If I don't find the original one, I'll just generate a new one for you. Okay, all right, beautiful. Listen, guys, to everyone, guys and gals, it's the weekend, so do make it a point to spend some quality time with your family. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-host, and guest. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any securities. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.